grow. Shout out to the team. Shout out to the team. So grateful for y'all being here. This is Abdul Shabazz, and this is Some Real Change Stock Options Trading Journey. And today, this terrific Tuesday, March the 10th, we are having a little bit of sideways action from yesterday's close. We're right at the area of yesterday's close. I still momentarily want to keep up pre-market because pre-market we did get to the 681. And I believe we might get back there possibly too. So if I do take a call, looking for a 677 strike, 679 entry. $680, 680.5 first profit target, 681.8 second profit target, 683.2 third potential profit target for the way down. Two possible options. I got a 675 strike with a 674.6 entry, taking it down to 673, and then 672.4. Another possible entry is at that 672.4. Taking it down a little bit further, I'm going to say 672.3 area. Nothing is exact. We're just dealing with areas and probabilities. Taking it down to 699 and then 666.2. Alarm set at, first I'm going to just go with what I have here. Alarm at 674. Another alarm at 679. Yesterday's action. If anybody else has any plans that they would like to share, feel free to put them in the chat. Okay. Out of this potential put, I like the 672.3 the best. I like the 672.3 the best. Taking that down to 669.7. And then 666, 666.4. I'm going to eliminate these last plans. This put is a little aggressive. And because of this strong bullish action from yesterday, I want to wait and see where in this would they be in trouble at. Where would these bulls feel uncomfortable at? They're perfectly fine right now because we're right around yesterday's close. However, if we get below that 672, if we get below that 672.3, that to me is going to be a much stronger potential reversal. This line here that I have with the 674.8, that would just be a decent pullback. So I'm going to adjust my alarm. 673 entry. Market starting off just as it did yesterday. Let's eliminate pre-market so you can see that. Market starting off just as it did yesterday. First 5 minutes, very volatile. First 15 minutes can trick you, have you thinking the market's going one way, and then completely go in a different direction. You can't count how many times we've seen that on this very channel. Which is why we don't predict, we prepare, and then we respond to whatever opportunity the market presents for us. Thank you guys for tuning in. Thank you for hitting the like button. I do appreciate it. Feel free to share your plans if you would like to. The chat is open. Got 2 alarms set. Really plan to ignore everything until one of my alarms go off, if they go off. And if they go off, then I will entertain a possible trade. Until then, I am prepared. I am ready. Again, pre-market has been removed. We do not need it. We're going to go with yesterday's action and today's. We have gotten the levels from it, but we do not need to monitor it. Sufficient is yesterday's action and right now, because as I stated, we're right in the same area of yesterday's close. Jesse Swanson is in the building. Quiet Soul. Todd Macon. Kosi is in the building saying good morning, everyone. Grand Rising from Quiet Soul. Good morning, Jesse Swanson. Good morning, crew. Big Ben is in the building. Cool, Abdul already have a line at 674.9. That was before I moved that line down. I missed your question of where in the former green will the bears react and cover. That's a big range to know when they're in trouble. What I did with that, Ben, is I used the Fibonacci. You saw me put that up, and I did on the Fibonacci. I only used 2 retracements, the 50 and the 61. I put the Fibonacci at the low of yesterday's 662 and put it at the high of 681. And to let me know that the 60% retracement line is below that 672. So to go along with that, that is where the imbalance comes, where the bulls will start heading for the door. Here at the 674 level, we're just halfway through this last bullish rally yesterday at 3 o'clock. You're just halfway through it. So even a pullback to the, in this case, the 20, even a pullback here Okay, it's just a healthy pullback. It does not mean a reversal, or does not mean the bulls are in trouble. In fact, it may be a perfect opportunity to set a trap for some early bears and squeeze them to new highs. But if we get below the 672 area, okay, I got my alarm at 673. We have now 1, 2, 3, 4 candles that have now been upside down and potentially be in trouble. This is a lot of bullish strength. So really, you just want to look, if that's the case, from right here, from the 670 to the 681, where in this last run, if you were a bull, would you think about taking profits? Would you think about covering? And then finally, where would you stop out at? Well, I'm trying to get them where they're covering. Okay, anything before that, they're taking profits, but they can mess around and bounce right back at that 674 area, bouncing right off of the 20-day moving average. I'm looking to see if we get below that. Where does it appear that these bulls are losing control? Well, if that price goes from 681, okay, as we reach to in pre-market high, we got the 681.2. If we come on down to 673, okay, that is a very substantial drop. Let's see what the Fibonacci says here, because I still got it up. Here, the 60% retracement is below the 674. Okay? But I'm also knowing that I have an area of support right here at the 672.3. So I'd much rather see if we can turn that into a break of support rather than trying to short right into it. So a little bit to think about. If anybody else has any plans, please feel free to share them. Thank you, Area 76, for tuning in on Kick. We appreciate you and thank you. That's asking a lot, but that's also why I feel comfortable with that. Let's pull up the weekly chart so I can show you here on the, or even the daily. We don't have to go that far to the weekly. Let's go on the daily. Beautiful move yesterday. What I did was, I'm completely transparent. I grabbed that Fibonacci. I put it right there at the low of that 662 that I told you guys. And I took it to that 681. That the market got to pre-market. It was 681.2. And when I do that, it is showing me that even splitting yesterday's daily candle, coming back down, okay, below 674, does present an opportunities for these bulls to start taking profit. And as we go even lower, they will start covering. We get below 670, then they might stop out. Other than that, there is a perfectly great opportunity for a call above the 679, as this could mess around and be continuation. As we stated, the bulls could be setting a trap for the bears, getting early bears to get activated so they could get squeezed like they were yesterday. Yesterday's action was a bear squeeze that took place in the late afternoon from over anticipation of the market going down because of World War III. So because of World War III, And because the way the market started and began, let's pull it back up again, looking at yesterday's daily chart. Well, for starters, we were already in a controlled selling algo. Let me make it a little bit easier for you to see here. This is the daily chart I'm on. Again, this is the daily chart I'm on. Now, I'm showing you this beautiful controlled selling algo here. Let me go ahead and brighten it up just a little bit more for illustration purposes. Okay. We have a high, lower high, high, lower low, lower high, lower low. So we are in this beautiful controlled selling algo. And what happened is yesterday when the market opened, the bears came right out of the gate with very heavy selling pressure from that 666 all the way down to the 662.4 area, which we called out as yesterday's first profit target. Well, as soon as it hit it, it bounced. Not only did it bounce, but it flipped from red to green. That was a beautiful indication to get in right at yesterday's 666 area for a call. And because we were in a controlled selling algo, because we gapped down from the 672 all the way down to the 666 and even lower if you look at pre-market. Pre-market we went to 656. Because we gapped down so low, everyone over anticipated thinking that we were going to continue to go down, and in fact a bear squeeze took place. But understand, this candle was a bear squeeze, not people having confidence in the market right now and putting more money in the market. No, this was advanced traders taking advantage of novice traders. Nonetheless, the overall market is green for today. It's green this week. Yesterday was green, and we have to be patient to see what the market brings. If ever there was a time to implement that rule of patient trading, today is definitely it. First 5 minutes, very volatile. First 15 minutes can trick you. Give the market some time to show us exactly what it wants to do. We've already seen where the trades are. Now the only thing left is to be patient and look for that trade of certainty. Let me show you here on my trading view chart, as I do every day. Show you the illustration of my plan. That illustration indicates that I want to take a call at 679 area, which is this area here. So coming from the 677, I would like to see us go up to that 679 and then have a retest. So I'm looking for a break and a retest. If you ever wondered why I just don't make a straight line, well, now you know. I'm looking for a break and a retest, and then a move back above the 679 to join. Taking a 681, call it 682, as that is a monthly area of resistance, as well as 683.3. And those are my plans. 677 strike, 679 entry, 680.5 first profit target, 681.8 second profit target, 683.2 potential third profit target. But if the market wants to come on down, if she wants to come on down, then I'm back at that 673 strike, 672 entry area, to 669.7 and 664. But it will start getting a little bit dicey below 675. But below 675 is not a reversal. It is just simply a healthy pullback. Below 672, below 673, we can start seeing the bulls headed for the gate. But today is a great opportunity to hurry up and wait. Look for a clear sign. And the word I want to use is an obvious trade. Let's look for obvious trades. This put is looking very strong here on the larger time frame. But as our teammate Dan the Man, who currently today is not in the building, would say let the candle close. We see beautiful bullish move here with these tails. Tails are beneath the candle real body. Wicks are above the candle's real body. These tails indicate bullish rejection of lower prices, where bulls stepped in and brought the market back up. So, on the reversal, if you get in a put, you're looking to extract money from these bulls. Yesterday's bulls and then this morning's bulls, who have been very active this morning. But they're not in trouble until the market closes below this area and then begins another candle. If you jump in early, too early, as this was the anticipation before. This started off as a red candle and then it flipped green. Now, this is what we want to see right here. We got the close at the level. That's confirmation. What we're looking for now is continuation. That will be below the 675 4 area. Okay? But to have a surety, we would like to see a break and then a retest back to this area. If you want to be aggressive, you can get in here and then just stop out if we break resistance. Just that simple. Myself, I still realize it's early as we just hit 10 o'clock. Very valid opportunity. It's even more stronger on the 30-minute chart. Very strong looking put on the 30-minute chart. I, however, am choosing to remain patient. You do what is comfortable for you. The put is there. However, we did get the confirmation and we are getting continuation right now. We really are. But I'm choosing to be patient because, as I said before, this is not a reversal. This is just a healthy pullback and I don't want to get popped. So I'm going to wait until that 673 area. When that 673 area goes off, woo-wee, you better believe they're going to be headed for the gate, buddy. You better believe they're going to be headed for the gate if it goes off. We don't make predictions. We just react. Thank you guys for listening to my thoughts, allowing me to explain my plans, my alarms I set. I wish you all safe trading. Patience is the key. Yes, sir. Lots to think about. But what we want to look at, guys, is the higher time frame. We want to look at that daily chart, okay? The more the daily chart comes down, the more pressure is on yesterday's bulls. Keep that in mind as well, which is why we don't want to move too early. We've seen what kind of squeeze is possible. The question is it sustainable? It's not looking like it. We just had a beautiful retest that put in a lower high. There is a controlled selling algo on the horizon. I have to identify right now. That is my job, duty, obligation, and responsibility. There is a controlled selling algo. There it is. A beautiful control selling algo with a retest of the 677. Again, let us keep our eyes on the daily chart as well. Big Ben said, I wish it were straight with no pullbacks. So do I, Ben. So do I. The bottom of the algo. I'm gonna go ahead and blow it up.
I think until that is by an end to hostilities or through some kind of convoy escort system, which is much easier to say than it is to implement, we think that the traffic is going to remain very constrained, regardless of whether you can fix the insurance cost itself.
Yeah, obviously why the markets are so sensitive to any hint that maybe hostilities might be winding down. Krishna, really appreciate it. Thank you.
Anytime.
Krishna Guha.
Here's our roadmap for you for the rest of the hour. Still ahead this morning, a can't-miss interview with U.S. Special Envoy to the Middle East, Steve Witkoff, on what comes next in the war with Iran.
Plus, logistics company Flexport says it has a dozen containers around the Strait of Hormuz. We'll talk to the company's CEO about how the war is snarling the global supply chain.
And software's down today, but it has tried to make a comeback from those lows. We're going to talk to Melius's Ben Reitzes about where that trade is heading next as Squawk on the Street continues on this Tuesday.
Big shout out to everybody for being patient. You see the games. It's right in front of your face. We were able to identify what's going on, so we're not getting tricked and caught up in it. No, we're not. Again, as I stated earlier, a pull back to the 675 area is just a healthy pullback. This could literally be a trap set by the bulls to entice early and eager bears and then mess around, squeeze them to take on and establish another high. We have a control selling algo.
Is pulling back today after rallying over the last week. Our next guest says investors need to be careful trading this sector as these AI disruption fears persist. Let's bring in Ben Reitzes, head of technology research over at Melius, joins us here at Post 9. B, it's always our pleasure. Good to see you.
Great to see you.
What does that mean? Be careful. Don't trust this recovery?
Well, I don't trust it. I think that we're going.
I don't trust it either.
Here in software, where we're completely unwinding software's eating the world and getting to AI is eating software, and we're tokenizing software. So software is actually going to be the biggest sector within tech really soon. And we're going to have tokenized software on demand. That is a tough transition for SaaS seat-based companies. They have an innovator's dilemma that needs to move to consumption, and they're all on their back foot, even Microsoft. And what we're seeing is with the layoff announcements and whatnot, that's not great for seat growth. And the way the companies are digging in their heels and then adding more price increases and things, it's probably going to backfire on them long term.
You've had tough notes on Azure, for example, or
yeah.
Right? I mean, have you gotten pushback on those?
I get a lot of pushback on Microsoft. How dare you? A lot of SaaS analysts, it's the strongest company they cover, and they're all afraid of them, so they're afraid to say anything. But really, the truth with Microsoft is Copilot is something that probably needs to be given away. Yesterday, they made some announcements, and they said they're going to charge you anywhere from $99 for certain Copilot included offerings and whatnot. I just don't know if the enterprise really wants to keep paying more for AI. Adobe's not successful with Firefly, tried to make people pay extra for AI. You know, Salesforce is trying it with Agentforce. I just don't think paying extra for AI is a thing. I think that that is just not a thing. I think it's kind of arrogant of the software companies. They've been putting price increases.
Breaking out of that algo right now. We're breaking
greater
out
than the rate
of the
inflation,
algo
and now they want you to
right
pay
now.
extra for something that's
Get
table
back
stakes.
above
While you're laying off
677.
workers.
Watch out
you put Microsoft
as
in that
early
category?
bears will start
Of
covering.
course. Microsoft just said they're going to charge you an extra $99, and they want you to pay extra for Copilot. I think they're going to eventually either have to give it away, or when they say it's a paid user, it might be somebody with incentives that's getting a discount somewhere else, and then they're paying for Copilot. But that's going to take a lot of Azure capacity, and when more Copilot usage, the less they can beat Azure, because that's going to consume their own internal cloud. So that's kind of a hamster wheel that just keeps
Breaking the algo right now.
While Google and Amazon
Remember what I
crush
said,
numbers
this
in
could
the
be a
cloud,
trap.
because they're adding capacity and they're
Be careful
they don't
and keep
have that
watching.
problem.
What do we make of this report of NVIDIA's new effort with this open source platform that allows enterprise software companies to use or deploy AI agents? Is this kind of, helping them find the way, or is it some kind of cover for NVIDIA?
I think that it's a big moment. I don't know if that was officially released by NVIDIA.
No, I don't think so.
It's
a
was some
report.
guy. It
Yeah.
looked really good, though. Gosh, I want the software developer. It fooled me. But listen, this thing, OpenClaw, since it came out, is the moment.
Yeah.
And it's the tokenization of software. So it's rogue, though. It's something that a bunch of guys are buying Mac Minis, and startups are doing it like rogue on the side. And everybody's interested in the enterprise, but they don't know how to do it without hurting their sandbox of security. So the fact that NVIDIA, and I think it's going to turn out to probably be at least semi-accurate, is going to put out a tool that gives you security, corrals all the agents, is going to make this explode even further. And I think that what we're talking about here is a tool that works for you, that can send emails on your behalf, do calendar appointments, do flights, and these workers, it's going to take off. So I think everybody's going to have agents working for them. The more it's enterprise secure, can access your data, the more it's going to actually potentially cut seats, because and shows that you have to move to consumption. And that's a negative mix shift for SaaS companies, because they have no idea how to price for this. It's like, I'll price, and they know this. They're watching me right now, cringing. And and the beneficiaries are going to be Anthropic, OpenAI, Google Cloud, and the clouds that power this. And it's going to be a massive shift of epic proportions.
They're watching you and thinking you have it wrong, because
they've been watching me for 2 years saying I have it wrong.
but they say it accelerates their core business. The use of AI.
It accelerates?
It accelerates their core business, and we've seen that in some of the results, like a Salesforce, for instance.
Okay.
And that they have this growing AI business as well, which I know you're skeptical about.
Sarah, I mean, the stocks go down, and if you look at the results, the organic growth, when you look at Salesforce, currency has beaten quarters. The analysts see right through this. They report, they say they beat. There's currency effect, and you can tell that Agentforce is not propping up the results. Adobe's guiding for deceleration. There's cracks in the results. The street is getting this right, and there's a dead cat bounce right now, and I'm not sure how long it lasts. Maybe it's over today. But in general, what is going to happen is a massive disruption. And these things are not a 2-year thing, and they just continue. I really admire like a ServiceNow. I know it's getting crushed today. I think they're really hustling. I think they're just, if I was a SaaS CEO, I would actually not focus on near-term results. I'd be consolidating, and I'd be getting ahead of this, like Adobe did a decade and a half ago by changing their pricing model. And this, if I were a board member of a SaaS company, I would just say, what are you doing? Nobody believes you. You know, fix this narrative.
But before we go, can you explain this Oracle, OpenAI, Texas, Stargate thing? Is it wobbling? Is it over? Where are we?
I think that was much ado about nothing. I think that what most likely happened is OpenAI has commitments with Amazon now, doesn't need to do as much maybe with Oracle. But I think in general, Meta will sweep in, somebody else will sweep in, and people, like the demand is really strong. It's also 1.2 gigawatts. There's 800 megawatts that supposedly, according to the article, aren't going to be built, but somebody else will take it. And I think demand's very strong.
Ben, thanks. Covered a lot of ground. Good to see you. Be careful.
You got me on a good day, I know. I got bulletproof vest under here.
Ben writes us.
Thanks.
You're going to need it. All right, still to come, the CEO of oil giant Saudi Aramco out with a new warning on Iran, as one shipping expert says, no one's immune to the ripple effects. We've got the details. And later, the United States Special Envoy for Peace Mission, Steve Witkoff, with his read on Iran, whether an end is in sight. We're back in a moment. 30 minutes here into the hour. Here are three stocks we're watching. Vertex Pharma shares at the top of the S&P after positive results out of a late-stage trial for an experimental kidney disease treatment. Stocks up more than 8%. Air taxi stocks like Joby on the move after the Department of Transportation named that company, along with some others, including Archer Aviation and Beta Technologies, as picks for its pilot program to test the next-gen aircraft across more than 25 participating states. And remember pandemic darling BioNTech, which partnered with Pfizer on the COVID vaccine? Well, it's sinking double digits this morning after the company's co-founders said they would depart. The drug maker also swinging to a quarterly loss and giving weaker guidance, taking a big chunk out of that stock this morning.
Well, time now for a CNBC News update with Angelica Peebles. Angelica.
After President Trump threatened overnight to attack Iran 20 times harder if it stops the flow of oil through the Strait of Hormuz, Iran's security chief Ali Larijani makes a threat of his own this morning. In an online message, he wrote that Iran doesn't fear what he called Trump's empty threats and ended the message writing to the president, "Be careful not to get eliminated yourself." The FAA briefly grounded all JetBlue flights nationwide overnight after a request from the airline. That ground stop lasted only about 40 minutes, and in a statement, the airline said that a brief system outage had been resolved and operations have resumed. And ExxonMobil is ditching the Garden State and moving to Texas after being incorporated in New Jersey since 1882, when it was still known as Standard Oil. Exxon says moving means it can operate in a more favorable environment where state officials are familiar with its business. Rival oil giant Chevron shifted its physical headquarters there last year, so a big move, of course. Carl?
Angelica, thanks. Angelica Peebles. Still to come this morning, the CEO of supply chain and logistics company Flexport will get a read on what this disruption in the Strait of Hormuz means for global trade. Plus, the, quote, catastrophic consequences for energy markets of a prolonged conflict. That's according to the CEO of Saudi Aramco as we come off the session lows. Don't go away.
There's that squeeze happening right now. We're talking about it. We are now squeezed. All the early bears are now getting squeezed. But is it sustainable? I see above 679.
Oil prices down sharply this morning after hitting nearly $120 a barrel yesterday. It's been a crazy ride. The turn lower after President Trump said the Iran war could come to an end soon and the U.S. could take over the Strait of Hormuz. Oil giant Saudi Aramco reporting earnings overnight, and CEO Amin Nasser saying in a call with analysts and investors, quote, with the current geopolitical crisis, global inventories, which are already at a 5-year low, would see drawdowns at a faster rate. Global spare capacity is mostly concentrated in this region, so it's absolutely critical, he says, that shipping resumes in the Strait of Hormuz. The disruption has caused a severe chain reaction and not only